Alrighty. So in today's video, I have something pretty cool to share with you guys, and that is how to earn an additional 3 to 4% guaranteed on your options trading account. Now, first of all, I know this may sound a little bit scammy, but bear with me, guys, because this is something that some people are already doing, right? So if you're already doing something like this, you're able to get, an interest on your trading account, then good on you. But for the most part, right, most of us, when we open a trading account, right, chances are the broker may not be paying you any interest. So when you're trading, basically the only return which you can get is from options trading, right? You trade the options and then they give you a return. But right now, there are ways actually that you can have an interest on the funds where you park with the brokerage. So not only are you generating returns from trading options, you also can get an additional 3 to 4% on the funds which you put in the trading account. And there are two ways that you can do that. Well, the very first way, which is very straightforward, and that is to trade with interactive brokers, right? As you can see down here, interactive brokers clients earn up to USD 4.08% on their uninvested, instantly available cash balance. So this way, when you park your money with them, the idle cash which you have is actually working for you as well, right? So for example, let's say if you have $100,000 in your trading account, and let's say you put $50,000 into option trades. So $50,000 is being held up, right? But you have another $50,000 that's just sitting there in cash and it's not earning interest. Well, with interactive brokers, this $50,000 is actually earning you an interest. So this way, your money is really still working hard for you. All right, so you have this part that is making money from your options trading. Maybe you're earning about 10% to maybe 20% on this part, and then the remaining part, when it's not being used, there's still some interest to be gained, right? Until you finally decide to use them, and it goes to here, and those unused ones come back here again, and then you earn this 4.08%. So it's working really hard for you. So if you were to go to their site, you can see this, right? You can see the interactive brokers, they compare it with other brokers. So interactive brokers is paying you 4.08%, whereas the rest of the brokers isn't paying you that much, right? Especially TD Ameritrade, which is another broker which is good for trading options. You can see it's only paying you 0.35%, which is not much at all. So it's not really making your money work hard. So if you have a big amount, let's say you have 6 figures or something, then you want to really consider trading with interactive brokers, because if you have a large amount that is unused at any one time, this will not be sitting idly because it will be earning you an interest. Now, there is a caveat that you need to really take note of. As you can see down here, this fine print down here, it says that the USD credit interest is paid at the stated rate on balances over USD $10,000 in securities account, with NAV exceeding USD $100,000, and accounts with less than $100,000 in NAV will receive USD credit interest at rates proportional to the size of the account. So what does it mean? So it just means that if you have less than $100,000 account, you may be earning lesser than this 4.08%. So they gave you an example down here as well on their site. So you can see for the first $10,000, you're not earning any interest, right? It's just 0%. Now the interest will come from the next $90,000. So for example, down here you see $90,000, you'll be earning an interest at 2.58%. So I believe this is the old rate. So the new rate is probably around 4%. So if you have any uninvested cash, right, this part will be earning the interest. Now, what if you have a trading account size that is less than $100,000? So as you can see, same thing, $10,000. The first $10,000, you're not going to earn an interest. But then the next 40,000, let's say it's about $50,000 account, you're only going to earn half of this, right? Half of this 2.58. So it becomes divided by 2. So now the interest rate, it's not as good as if you had a $100,000 account. So for most people, right, when they're just starting out, chances are they won't start out with $100,000, right? Most of the time they will start out with a smaller size. So in this case, your interest isn't earning that much, but hey, at least you are earning some interest, right? That interest could at least cover, commissions, or maybe if you have some losses, that interest may just help to cushion some losses. So there is actually another method that would be better than this. By the way, if you like this video so far, please subscribe and also click the thumbs up button, and also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month, trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. and that is through tastytrade. So on tastytrade, when I first emailed them, because I wanted to find out if they actually pay any interest on the cash balance on the account, right? So I messaged them, I emailed them, and they actually said that if you were to just put it in cash balance, right, they only pay 0.01% annualized, which is pretty much nothing, right? But they said if you plan on selling options for premium, you can purchase the short-term US T-bills where the rates are upwards of 4.5% annualized, and you get a 94% release on the T-bills towards buying power. So here's what this means, right? So for example, if you have $100,000 in cash balance, okay, so let's say you put all this into T-bills, right? You put into T-bills. So on this T-bills, it will earn you roughly about, say, 4.5%. All right, so let's say, for example, we go according to this email, he says 4.5% up to, all right, so maybe the average is around 4%. So let's say put around 4%. So $100,000 will be earning you 4% interest. Now, once you put into this T-bills amount, right, the money which you parked in here is not locked up. Rather, they released 94% of it. Now you have 94% being released as option buying power, which is about $94,000. So now you have $100,000 working for you to earn 4%, which is pretty much the full amount which you put in the trading account. You earn 4%. On top of that, 94% of it can be taken out to be used to trade options. So now you're earning a return on a return. Can you see that? So this is very much different from this interactive brokers. So interactive brokers is only on your uninvested cash. So let's say you have $100,000, you put $50,000 into options trade. Let's say this is in options for interactive brokers. You put it into options. The other 50,000, then you earn the interest. And as you know, anything that is under 100K in NAV, you will earn lesser interest. But when you put it with tastytrade and you buy T-bills, they'll release this amount for you to trade this option. So imagine from this $94,000, you're able to generate, let's say, 10% return. So now you have 10%, and this money is also still working hard to earn that 4%. So suddenly now you're earning much more than if you were to just have this trading account that's just fully trading options, right, without putting into T-bills. So I went to find out a little bit more. I want to do a little bit more research, and as you can see on their sites, it says down here, we margin the T-bills at 94% in margin accounts only. So one thing to take note is that if you want to do this method, you want to buy T-bills, you pretty much have to use a margin account, right? So as they say, cash account or IRA is not possible. So T-bills are marginable and have a margin requirement of 6%. So if you deposit or buy $100,000 and use it all to buy T-bills, you will still have $94,000 in buying power. And on top of that, you need to know that there is a $25 fee for you to purchase these T-bills through tastytrade. So if you think about it, this is a way for you to actually get your cash working much harder for you. So let's do some real quick calculations down here. So let's say, for example, you just have a $10,000 account. Now, with interactive brokers, if you have $10,000, you know that it will generate 0% interest. There's nothing on that. But if you were to do it with tastytrade and you were to purchase these T-bills, then guess what? You'll be able to earn this interest, right? So how it works is this. So let's say, for example, you buy this T-bill maturing in September 23 for $966.70, right? So this will always be the discount price, right? When you purchase the T-bills, there'll be the face value, which is the maturity amount, which you get upon maturity. That means you get back your cash plus interest, and then you get the discount price. So this is the discounted price which you buy upfront. And then let's say, for example, you buy 10 T-bills. So that will be $9,667. So that means the interest earned on maturity will be $333, right? And your cash balance right now will be $10,000 minus the $967 minus the $25 fee to open up this trade, right? The transaction fee. And then now the final cash balance is $308. And from there, now you have the option buying power because you put in $9,667 to purchase these T-bills. So you will have 94% release to your option buying power. And now on top of this $333 of interest which you will receive at maturity, you have this amount to play with to trade options. Now, if I'm not wrong, if you were to buy T-bills, let's say with any banks, any financial institutions, the amount which you buy into this T-bills will be pretty much be locked in there, right? You can't say that, I want to buy T-bills and then please give me, 94% of it for me to do something else. But with Tasty Trade, you're able to use this to go and trade options. So now you might be wondering, wow, this sounds a little bit too good to be true. Are there any risks with this? Are you sure that I can earn this interest upon maturity? Is there any catch? So the thing is, yes, there are risks, right? I will put inverted commas risks, but not in a sense whereby the risks on your interest, because these are being guaranteed by the US government. Of course, there is the chance where the US government might default on the bonds, but what are the chances of that, right? That's why it's called the risk-free rate. The government will just keep printing money and printing money to pay out this interest if they need to, right? So what are the risks associated with this method? Well, the risk associated basically comes down to this part, right? First of all, you can see the cash balance which remain is only $308 because you have already used most of it to actually put into T-bills. So the thing is that when you trade options, there will still be drawdowns. For example, if you put on a put spread, let's say you sell a put spread with a 30 delta, that is about a 70% win rate, which means to say 30% of the time, roughly 30% of the time, you will actually lose money. So if you lose money, it will actually eat into this cash balance. So let's say, for example, on one of the trade, you lose $500. If you lose $500 on that trade, then guess what? Your cash balance will now become negative. So when it becomes negative, all of a sudden now you are on margin, because right now you are trading with the broker's money, you are borrowing their money, and when you are borrowing the money, they will charge you a hefty margin rate. As you can see down here, the rates down here are very high, all the way from 8 to 11%. So for the most part, most people would lie somewhere around here. So if you're only earning about 4% on your interest down here, but then you're paying so much down here in terms of your margin rate, then in the end, the interest might in the end be cancelled out if you get too negative in terms of your cash balance, right? So remember, when we are trading options, there will still be drawdown. Your account size, let's say for example, your account here, it's not to go straight up, right? That means it's not going to just keep making money all the way. There will be ups and downs. Ups and downs, you'll be able to face like drawdown maybe for some time, then you'll come back up again. Right? So for these times where there are drawdown, you need to have sufficient cash inside down there. Otherwise, you'll be eating into your margin, right? You'll be tapping into the broker's money and you'll be pretty much borrowing from them at such a hefty rate. So instead of purchasing the T-bills with the full account, let's say you have $10,000, you may want to decide to buy a portion of it. So maybe you want to put maybe 25% of it, or 50% of it, 75%. This is really up to your risk tolerance. Also depends on what kind of drawdown you think you anticipate, right? If you think there's going to be a 50% kind of drawdown on your account, then you want to put up to 50%, right, into T-bills. So you put 50% into T-bills, at least those 50% is earning you that guaranteed risk-free interest. And then on the other hand, the other 50%, you can use it to trade options. So that pretty much is the only risk which you can have, and that's the only one that I can think of, right? Apart from the US government defaulting on your bonds. Other than, for the most part, this is a way for you to actually earn interest on your account. Now, the next thing you might be wondering, this sounds good. How are you able to actually purchase these T-bills through Tasty Trade? Well, first of all, you need to know what are the T-bills that you want to buy. So I spoke with the Tasty Trade support team, basically the trade desk. They will just ask you what QSIP you want to buy, right? So basically QSIP is the serial number, right? It tells you which are the bonds that you are thinking of investing in, or you're planning to put your funds in. And you can see down here, this is the government website, treasurydirect.gov. You can see down here all the different T-bills, the maturity dates, right? You can see down here, this is the date that issued, this is the maturity date, and this is the yield that you will get, right? You can see this is the investment rate. So all you have to do is just go to this site and then take a look at which are the ones that you are interested in putting your money in. And then you just tell the Tasty Trade desk, right? You just go to there, you go to the live chat, and then you say that you want to put some of your funds into this T-bills, and then they will help you place the trades for a $25 fee, right? Or you can just go to them and then they will just ask you what maturity dates are you looking for. So you can tell them, say, I want one that expires, matures at the end of the year, and they'll just quote out what is the quote for you, and then just go ahead and purchase them. It's pretty simple. It's very simple and straightforward as that. So what I've done is that I went ahead to purchase T-bills as well. So I want to purchase about $140,000 in terms of the face value of the T-bills. So you can see down here about two different T-bills. One of them is maturing at the end of 2023. The other one is in January 2024. So you can see down here it says the open price. So this is the price which you will be buying at. So down here you see 966.7, here is 965.23. And then of course, when you're purchasing these T-bills, they are pretty much bonds, right? So the prices will go up and down. So which means to say you can actually close them before it actually matures. So if you do it this way, it's pretty much like trading, which means to say that you could actually lose money if you were to close out prior to its maturity. So let's say you see this, I open it for 965, it's now trading for 964. So if I was to close this right now, I will incur a loss, and then I'll still incur the $25 fee as well for transacting this. So if you want to buy this T-bills, the best is to hold it all the way to maturity, because once you hold it to maturity, then you will get the full face value of which you purchased, right? So the face value of this is $140,000, which I purchased for the T-bills, and the purchase price is $135,000, which means to say at the end of the day, I'll receive an interest of $4,854. So this interest is just free money for you, right? Because you're going to park your money in the trading account anyway, so why not generate this interest? So this interest can help you, increase your returns on your overall option trading. Or if you break even at the end of the day, this can really help you with your commissions if you really trade a lot. Or if you have some loss, then guess what? You can use this money to cushion some loss. So this is a way for you to earn an additional 3 to 4% on your options trading account. If you haven't already been doing it, you can always go ahead to do that. So if you haven't opened a Tasty Trade account, you can go ahead to the links below. I'll put the link at the description below. You can go ahead to open an account there as well if you want. Alright guys, that's it for this video, and I hope you found this video helpful. And if you like this video, please give me a thumbs up and also subscribe to my channel as well. This way I can create more videos like this for you. And last but not least, thank you for watching. I appreciate your time, and may the options favor you.